Hey guys, my name is Alex, and I'm going to be talking about how to incorporate our very powerful pattern detection algorithm into your trading strategy. Also, I'll be going over a proven method on how to lock in your profits and reduce your losses when trading. Let's get into it. Trading pattern breakouts. There are three methods of entry when trading pattern breakouts with the Chart Prime pattern detection algorithm. The first and most aggressive method to enter the trade is when a good portion of a green or red candle has closed outside of the pattern. Note, if it's only barely poking out of the pattern after the candle close, do not enter. There is a very high probability of a fake out. Once you have identified a strong momentum candle closing outside of the pattern, you can set your entry to the current candle close and put your stop loss just inside the pattern. This method is excellent for getting an early entry position, catching the move early on. However, there is an elevated chance that the breakout will indeed be a fake out. So it is advised to use this method when there are higher levels of confluence to support your bullish or bearish argument. The second and lesser aggressive method is entering the trade when our pattern algo has printed a red X. The red X is the point at which our algo has determined a confirmed breakout. At this point, there is less of a risk of price action coming back inside of the pattern for a fake out. But the risk does still exist, and setting your stop loss just inside the pattern is still good practice. The third, and in my opinion, safest method of trading the breakout of a pattern is trading the backtest of the pattern after the breakout. Trade opportunities will not be as frequent with the backtest method, but it is very reliable if you play your cards right. A backtest will happen after a candle has closed outside of the pattern, and in the following few candles, price will reverse direction to come back and revisit the top or bottom side of the pattern where price previously broke out of. The retest candle can hover just above, touch, or pierce the pattern. As long as the following candle closes green, and mostly or completely outside of the pattern, it is considered a successful backtest. If you're using this method with the Market Oracle, make sure you have candle colors set to normal candle colors. Now that we have a successful backtest, we can make our entry at the close of the green candle. So for this method, you have two very clear areas where you should be setting your stop loss, which is directly below the low of the backtest candle. Or you can find a spot inside the pattern if you're feeling extra confident of a reversal. Sometimes price will react violently after the retest candle, and the price will be too far played out for a safe entry. So if you get in early after the retest candle close, you can capitalize on some serious gains. In light of this, a more aggressive play to catch the bounce early is to enter on the retest candle close, as long as the body of the candle closes outside of the pattern. With this type of entry, there is a higher risk of price coming back inside of the pattern, so make sure to set your stop loss accordingly. The same stop loss positions apply here as they would if you waited for the confirmation candle. Follow this process in reverse for bearish breakouts. The candle after the bounce off of the pattern needs to close red, and you should set your stop loss above the high of the retest candle or further up inside the pattern. These three pattern breakout methods are very powerful, but you should always have other points of confluence to support your trade idea before executing your trade. Take profit strategy. This method is a great take profit method if you're always finding yourself holding on to a trade too long or not long enough. Once you've determined your entry and stop loss levels, start by finding your first take profit level. Make sure to place your take profit just before the resistance or support you choose. Many times, traders will front run these targets and price will reverse just before they hit them. Find your take profit by using either the support and resistance feature, predictive SR, SR zones, dynamic reactor, an existing trend line or pattern, or the closest discernible high or low where you think there might be some support or resistance. Now, cycle through each indicator and try to pick a conservative first take profit. Once price hits this level, you'll want to take out 50% of your position and either move your stop loss to your entry price or move it just below or above the closest support or resistance to the current price action. So now you have nothing to lose and everything to gain. You've already made profit on half of your position, and with the second half, you can follow the price with your stop loss, moving to each support and resistance as the price passes it, and exiting when price finally comes back to trigger your stop loss. This allows you to lock in some profits and also leaves the door open for you to make some crazy gains if the price really takes off. Now, let's try to apply this take profit strategy to this bearish breakout and backtest. We have entered our position at the close of the red confirmation candle and set our stop loss inside of the pattern because we feel that there is still some bullish pressure lingering around. Now, we look for our first take profit and find a good option next to a support level plotted by the market oracle. Price comes back to retest the pattern yet again, but thankfully I placed my stop loss far enough inside the pattern that we are still in play. Our first take profit has now been hit, and I now have made profit on 50% of my position. And with the other half, I will slide my stop loss from resistance to resistance until I get stopped out. So I will now analyze the chart and decide where is the best option for me to move my stop loss to. I always check the dynamic reactor since it's often regarded as strong support or resistance. Respectively, I decide to move my stop loss just above it. It's always a good idea to leave a bit of room between your stop loss and the support or resistance you choose because oftentimes there will be wicks that pierce through and prematurely trigger your stop loss. Now that we have passed through the next support, I have moved my stop loss just above it. And rinse and repeat for the next support level. Now I have finally been stopped out. As you can see, my first take profit was somewhat conservative, and if I didn't follow the price afterwards with my stop loss, my next take profit might have been much sooner, missing out on some serious gains. If you want access to our automatic pattern detection or any of the other indicators you saw in this video today, head on over to chartprime.com and use coupon code BREAKOUT for 20% off our trading suite. My name is Alex, and I really hope you got some value out of this video today. Trading pattern breakouts, in my opinion, is one of the most powerful strategies out there. Combine that with our proven take profit method, and you'll be unstoppable.